Industrial Market Report, Q1 of 2026. Portland's industrial market has faced weakening tenant demand over the past 2 years, driving up vacancy to 7.8%, above its historical average and pushing net absorption into negative territory, including negative 1 million square feet over the past year. Although new construction remains active with 4.9 million square feet underway and over 40% still available, the market is not severely oversupplied, but continued deliveries amid weak demand are keeping availability elevated. Rent growth has slowed considerably to 1.5%, giving tenants greater negotiating leverage, and some larger users continue to opt for nearby Vancouver, Washington for tax advantages. In sharp contrast to the late 2022 peak of 5.7 million square feet, net absorption declined to negative 1,084,000 square feet over the previous 12 months. Over the past 2 years, quarterly leasing activity remained consistent in the 2.5 million square foot range. However, it slowed slightly toward the end of 2025, resulting in an absorption number of negative 1,248,000 square feet to close out the first quarter of 2026. Portland overall industrial vacancy rate has risen to 7.8%, 1.7% over the past year. Logistics-focused properties are experiencing slightly higher vacancies at 8.9%, with buildings larger than 100,000 square feet exceeding 9%. For the market to shift back into an expansion phase and stabilize vacancies, leasing activity will need to extend beyond the West Side and the Vancouver area that benefit from strong, established demand. Until trade policy uncertainties subside and a broader range of industrial users see Portland as a viable place to grow, vacancy rates are likely to continue increasing gradually. The first quarter of 2026 saw 358,000 square feet of new product delivered to the market, while 4,872,000 square feet remains under construction. A total of 3,400,000 square feet has been added in the last 12 months. The largest project set for delivery in the second quarter of 2026 is the Mount Vista Logistics Facility in Vancouver, Washington. When completed in June, the property will add 583,000 square feet to the market. Also set for delivery in the first quarter is a Class A building on a Southwest Oregon street in Sherwood, adding a total of 358,000 square feet upon delivery in May. Portland's industrial rent rose 1.5% over the past year, down sharply from 6.8% peak in mid-2022. With vacancies continuing to climb, rent growth is expected to remain subdued through early 2027. Increasing sublet availability is also putting pressure on pricing, offering tenants lower-cost alternatives to newer, higher-priced space. Overall, asking rents ended the first quarter at $11.85 per square foot, though the figure is skewed by flex and specialized manufacturing properties, which make up roughly 1/3 of the inventory. Flex being at $17.67, warehouse at $11.02, and specialized at $12.18. For detailed information regarding this report and to discuss how Norris Stevens can assist you with your real estate needs, visit our website at norris-stevens.com.